Hi, good evening, everyone, and welcome to the 79th episode of Let's Talk About Market. So, as you must have seen, the Nifty index has fallen meaningfully, and it's not a good sign because a lot of important support levels are being challenged. Now, whether we get the follow through in the coming trading session or not, that needs to be seen, and that will be actually very crucial because in terms of chart patterns or in terms of overall structure, the Nifty index is at an important level now. So what happens next will be very important. I mean, this is if I try and combine the options data along with technical data, I mean technical chart patterns and indicators, all of them are important, pointing out towards important support levels coming. Uh, or rather Nifty being at an important support level. So just let me quickly share my screen. If someone can please confirm if you all are able to see my screen properly. And of course, if you all are able to hear me, please put it in the comment box so that we can get started. If you all are able to hear me properly, please. Okay, thanks for the confirmation. So yeah, I mean, see, this is the pattern that I was kind of worried of, which is that a sell crossover and the average is being breached. I mean, not a good sign. The warning signs had come last time only when I mean, when the 40R was broken on the downside and the Nifty index was kind of trading below that. Again, over here there was some hope of a turnaround because there was a bullish crossover, but I had mentioned that we need to break above the hourly averages, else it might be a bit difficult then. Eventually it did not just I mean, it did not break above the averages and it sold off. Now, why I'm saying that Nifty index is at an important point, because I mean, if you all recall, yesterday I had mentioned that at every 100 points, the Nifty index was at an important support level. Okay. Now, this is where we are today. It has broken below the trend line, which is not a good sign. But, in this market, we have seen that we are not getting follow throughs, which means that, if there is a breakout, there's no follow through on the upside. And again, I mean, if there is a breakdown, as you see over here, it ends up coming back as well. So whether we see the trending move or no, that needs to be seen. But of course, I mean, given today's close, as it was near the day's low, the bears clearly have an upper hand. Now, we may just hope that this previous low does not break decisively, and it eventually bounces back. One of the reason why possibly I'm not sure. I mean, frankly, the hopes are very less of a turnaround, but there are two things that I'll be watching very closely. So one is this daily swing, that has now today moved to 22. So over here it kind of peaked and now it is almost coming towards the lower end. So I mean, maybe tomorrow we end up seeing a turnaround is what this is telling. The other thing that I was watching out was the options data. So if you see this, if I do the combined OI, okay, so combined OI takes into account all the expiries. So over here, we can still see that 26,000 put option has the highest open interest so far. Okay, so far, and even if you see today, given that we had seen a sharp selling, there hasn't been much of an unwinding in the put index yet. And if you see the OI PCR, it is somewhere around 0.68. So the swing around 22 level and OIPCR around this 0.68, and the open interest at 60, I mean at 26,000 mark, which is still very high, is indicating that there is some hope of a turnaround. If at all we don't see a turnaround, okay, tomorrow, then maybe the expectation will be that either this low or this low can come, of course not in a straight line, but maybe somewhere over here a pullback happens and then we correct, or something like that. And then what will be the watching points? The watching points will be, so of course, before that, there is one thing that you definitely need to watch out for is that call minus put histogram, because today a lot of, I believe, call selling might have happened. So if we end up getting this thing around, this green bar around this red mark, which is what had happened over here. So probably in a day or two, then the expectation will be of a bounce back. And mind you, these are very, very short term indicators, so you have to consider it that way only. Okay, 1 to 2 days may there can be a possible bounce that can happen, but that is only when it reaches around this upper end of the range. I mean, so far it is around, I think, 1,93,83,000 or something like that. But you need today's data to see. I think the data will get updated somewhere around 7:38, whenever NSE puts out on his site. So that's what I will be looking out for. I mean, these are immediate thing, right? I mean, if at all these support levels are not broken and we don't get a bounce back in a day or two, then you would need, then we will end up seeing that average swing might come back to this oversold zone, which again will lead to some deeper correction, where probably 25 700 or even 25 500 400 kind of levels will come into the picture. And additionally, this diffusion indicator, which has been now more towards the upper end of the range, then here the risk will start emerging that can it fall towards this zone. Okay, even the percentage of stock with RMI, there was some divergence over here, and from there it has seen a correction. So all these indicators, till the time they don't come in oversold, then the room will be left that much on the downside. That is what then we have to mentally be prepared of, if at all we don't end up seeing a pullback in the near term. Okay, uh, the hint that we might get of pullbacks, I mean, this decline extending, will be basically IT index, because IT index, you see, it had tried to bounce back from the 40-day exponential average, but today equally we have seen a sharp correction. So I think if the 40-day breaks on the downside, then there is a risk that the prices can go lower. And mind you that we have result season, I mean, for starting with big IT companies on 12th, I think, when I was checking. So 12th now, 12th Jan is when they might end up declaring their results. So you need to be careful of that fact. And the other thing is Bank Nifty. So Bank Nifty on the hourly chart has already weakened now, because you can see that the 40 R is broken on the downside. Not a good sign. I mean, it needs to now break above the averages for some bearishness, uh, to get away. I mean, to get away with some bearishness. Else, if it trades below the averages, then an episode like this can happen, where it will just consolidate and then go down. So I'm not sure. A bit confused, but this I'm telling you with the past history that whenever we have seen breakouts, it has pulled back. And and even the breakdown that you see over here, right? I mean, this also did not sustain. So when breakouts or breakdown, none of them we end up seeing follow through. Those are the signs that this is a sideways market, and then that is how it will be. And of course, Trump keeps on saying something or the other, and which can hurt sentiment. But I mean, not sure. I mean, he can also tell that now things are going right, and suddenly we will end up seeing Nifty gap up by 100 200 points. So that's where we are right now. uh, uh, so the best would be that if you see all these indicators towards oversold zone, that's where you can be a lot more sure of a short term bottom. But at this point of time, it is risky, and surely the risks are a bit more on the downside. I'm just hoping that tomorrow we see a pullback. I mean, if that happens, then then there can be some hope of a recovery in the coming days. But if we don't see a follow, I mean, if we see a follow up selling tomorrow and Nifty also closing around the days low, then that may not be a good sign. So that's how it is right now. If you see it in the small and the mid caps as well, I mean, the disappointing part is that after breaking out, it is coming back. I mean, those are never a good sign. In fact, even if you see over here, your daily averages are broken on the downside. Uh, there is a risk of a sell crossover that can happen if we see a selling pressure tomorrow, which is again not a good sign. And in the small cap, it had broken above the 40, but now again gone back below that. I mean, these are not good signs. Similarly, micro cap. Uh, I think if I have to now check the bounce of the previous fall, that was around 50% and it has sold off. So not very encouraging sign. The only hope that we can have is that this was all higher top higher bottom structure, and the higher top higher bottom structure is not gone yet. That is the only hope that we can have. But for all that hope, the swing low should be not breached on the downside. I mean, if this breach is on the downside, then there is a risk of a correction again towards the previous low or maybe more. And the other thing is that the constant worry which was there of India VIX. So in the past 2 to 3 days, it are now starting to move higher. uh, so yeah, I mean, of course, over here again, if we end up seeing follow through in VIX, so that might end up resulting into Nifty index also correcting. So that is the picture at this point of time. It is painful, but can't help it. I mean, this is how the market is right now. And as I mentioned, I mean, from a medium term perspective, I have no doubt about it that we these are this consolidation should resolve on the upside. The only question that is still not clear is that I'm so sorry. I mean, I had a long day today, so sorry about that. But yeah, uh, basically, the risk is that can we bottom out from here? Can we go all the way till here? Or this ends up translating into a bigger correction where, this was entire consolidation phase. I mean, this is very, very difficult to track. I mean, each time when the Nifty bounces back, the hope is that it will rise higher and it will eventually break out on the upside. So frankly, today's fall, I wasn't really anticipating that. But once this 20-day and all got challenged, I mean, that's where it did become a bit risky. So yeah, I mean, that's how we are placed at this point of time. uh yeah, I mean, that's all, I mean, I can say for now. You know the main watching point is tomorrow. If we end up seeing a follow through, there will still be hopes for the bull. If we end up seeing a selling tomorrow, then you might end up seeing something like this happening, or I don't know, I mean, something of that sort may end up happening. So need to be prepared for those scenarios. And maybe if there are short term trades that you have taken, maybe it will be a point where you need to tighten your reversal levels as the risk will open up on the downside. So that's what I am seeing at this point of time. So metal rally, someone is saying, is that over? When I see the chart, it doesn't look like. uh, I mean, only in the hindsight you would know that if this is over. But as of now, I don't think so. I i mean, of course, we need to see. I think today's Thursday, right? So we need to see tomorrow's closing. uh Tomorrow, actually, this might end up giving negative close. Hmm, not a good sign, actually. I don't know. Just if I see this, So this is kind of the breakout point for metals. Maybe the last hope would be this trend line support, which is say for CNX metal is somewhere around 10915. So that is also somewhere around the daily averages it might end up coming to. So let's see what happens. I mean, whether it holds, doesn't hold, not sure. Need to see, tomorrow how it reacts. Maybe tomorrow, we end up seeing I mean, we'll end up getting weekly closes as well. So I don't know if we can find something out of that. As of now, let's hope that there is no follow up selling for today's, downtick. Else that will be negative. Option RMI, should working employee investor trade in options? If yes, in which team? Hmm. So, option trading requires a lot of attention. Uh, if you all are able to give that attention, then well and good. Uh, if not, I mean, stay away. That is what the simplest advice would be, because it requires a lot of monitoring and so on. And in fact, I mean, right now the markets have also become so dull that, I mean, while premiums might be less, but it is not going anywhere, right? So it is, you might end up just losing the premium, and that is what is happening for quite some time now. So, but yeah, I mean, working employee, very difficult. I mean, very difficult. So if you can devote time, then only think of it. Else, the best would be to just stay away. And Sethi, what do you think in metal index that fell the most? In just watch the heat map. Even I'm not sure. I think I had seen Hinzing falling. Metals. So yeah, the highest that fell was Hinzing, then JSL, then Jindal Steel, and so on. Hind Copper, Nalco, Archit. With swing at 20 and indices being oversold, so Archit, that is what I mentioned, right? That you need to see some signs of pullback, right? I mean, you either see a break above the hourly averages or a positive daily close for you to establish a swing. I mean, as of now, this 22 reading can also go to single digit, right? So that is the risk right now. Maybe if we end up getting a positive daily close tomorrow, then whatever will be the swing low becomes an interesting point to watch out for in the near term. With swing at, yeah, and RSI at oversold. Uh, yes, definitely. I mean, the bounce is expected, but will it be just a bounce or what? Needs to be seen. Arshid. Maybe I think tomorrow we might have a clear picture on swing. I mean, the best case would be to get a positive close and a good breath, leading to swing seeing an uptick. But if it is a down day tomorrow, then need to see. I mean, how is everything placed? Vinayak Code. So Vinayak, I have mentioned this earlier. I mean, all this Rohit sir had coded when strike was not there. Now everything is available on strike for you to see. If you want only RMI, you can call the help team. I mean, for some commercials that will be there, but you might end up getting. I mean, that would be just a one-time pay, and you will get it for lifetime access. So it's up to you. I mean, if you want it, then you can take it. Else RMI should be visible for you all on the Strike platform. Yeah. So yeah, I think these are the queries so far which I've tried to address. Anything else? Please let me know. Anything else? Please let me know. Else we can wind up this session. Yeah, thanks, Vinayak. You can just get in touch with sales guys. They will help you. And just in case, if you don't know how to contact them, just go to help, raise a ticket, okay? And over here, you can choose the relevant ticket what you want, and you can ask them that please call me. I need RMI indicator on TradingView. Can we discuss the commercials or something like that? You can just message. They'll probably come back to you. Okay, so I think that's it from my side for today. Let's meet up tomorrow and see how the weekly closing is, and whether we get a follow up selling for the kind of breakdown that we have seen today. Ideally, if this has to translate into a bigger correction, or maybe some more legs is there on the downside, then all might end up happening tomorrow only. So in that sense, it might be a crucial day tomorrow to see what happens. I mean, closing around the day's high, day's low will be very. Will probably be very negative, and then the downside levels might open up. So you need to be careful on that. Baburaj says how one should rebalance their positions portfolio in this kind of correction. So Baburaj, it all boils down to the techniques that we have spoken about, right? I mean, say for example, if my positional view was long for the Nifty index, with the break of the averages, I will have to book out. Okay, because now whatever I was thinking of a bullish outcome that has not played out, and this would force me to book out. So for booking out or rebalancing or whatever it is, have a look at RMI and the averages and so on. That is what I look at, and then you try to think, whether it makes sense to still hold or book out and maybe re-enter at a later point. These are all things that are pretty much subjective, needs your conviction and so on as well. But yes, at some point of time you'll have to follow that methodology. You can have your own, but typically what we try and see is that, whether the daily averages are broken or no. That is the first red flag. If it is broken, then and the market is weak, then you're better off selling it off and probably re-entering when there are signs of strength. So that is how I'm thinking about it, and we also usually think of it that way. So I think that's it. So yeah, let's catch up tomorrow at 5 p.m. Let's see how the weekly closing is, and what are the other observations that we have now. And yes, I think there was one more thing that I just forgot to mention. It is also on the options data that is giving us that hint. Because you can see that today, actually 26,000 call option, they did not budge. Okay, there was only minor correction or consolidation. Minor unwinding that we saw in 26,000 put. But if we end up staying below 26,000 tomorrow in the initial hour of the trading session, then there is a risk that these guys will get nervous, who have shot at 26,000 put, and then on the downside, 25,500 kind of levels might open up on future. That is also one more risk. This was one thing which I wanted to highlight, but it just slipped my mind. So just thought of letting you know this. So yeah, the watching point tomorrow is that whether we get the follow up selling or no. If yes, then what are these 26,000 put writers doing? If they are still unwinding, then the panic can set in the market for tomorrow specifically. But if we end up seeing a lot of selling pressure tomorrow, then daily swing may end up going to oversold zones, and from there a tactical pullback is what that can be very much possible. So that is how we are placed right now, and let's see tomorrow, maybe we'll get a better clarity, and I'll be also uh, a bit more well positioned to tell you where are we now, because right now Nifty is at an important point in the short term. So yeah, once again, thanks a lot for joining today, and let's catch up tomorrow at 5 p.m. Thank you.